Lucid Group stock is gaining traction as the electric vehicle startup obtains positive press coverage. It was impossible for the investor team to remain silent about LCID after the Environmental Protection Agency issued a range-extending rating to the company's all-electric luxury vehicle, branded the Lucid Air. Investors expect that reaching this milestone will result in an increase in reservations, as well as an increase in the value of Lucid stock, which some have dubbed the Ferrari of EV makers. In today's video, we'll talk about what prior analysts anticipated about LCID, followed by what investors might expect and what they should be on the lookout for. So, stay tuned for that. Welcome back to New Vehicle Media, your go-to channel for EV stock. Quick reminder that subscribing is free and liking the video helps YouTube suggest similar content. Comments are loved and featured in upcoming videos. Lucid Group, the luxury electric vehicle firm, has received a lot of positive press attention as well as some negative coverage, but most of it was good press. Let's take a deeper look at these reports and see whether they have any implications for Lucid Group's investing. That could provide indicators as to whether or not the company's stock is a good investment at the moment. Analyst rating Lucid good. Lucid's most recent analyst frenzy began on September 9, 2021, when Citigroup upgraded the business to a buy rating and set a price target of $28 per share for the stock. Citi analyst Italy McKelly believes that, based on their assessment, Lucid possesses the critical building blocks to benefit from the EV car of the future transition, such as leading EV tech credentials, years of development and experience. Brand momentum was evidenced by website traffic data and speed to market. The news came as welcome relief after Lucid's stock plummeted as early investors cashed out their investments. However, the company's stock price then dropped by more than 5% on September 14, 2021, when Morgan Stanley analyst Adam Jones gave a negative review and set a price objective of $12 for the company. But later on, a buy recommendation and a price target of $30 per share were given to Lucid the following day on September 15, 2021, by John Murphy, an analyst with Bank of America. The company's CEO, Murphy, compared Lucid to both Tesla and Ferrari and described it as a genuine startup electric vehicle manufacturer. The excellent technology developed by Lucid was lauded by all three analysts. The dramatic disparity in price estimates between Citi and Bank of America versus Morgan Stanley was mostly due to differing assessments on how Lucid's competitive advantages will fare against more well-funded and more experienced rivals. Since anticipating Lucid's near to medium-term price movement is a speculative activity, market expectations should be taken with a grain of salt. Ultimately, the most important point to take away is that Lucid is receiving significant attention from Wall Street even before it begins mass production of its first car, which is a tribute to the optimism and premium valuation placed on potentially innovative EV startups. The million-dollar Lucid investor question. As of the closing of trading on September 24, 2021, Lucid Group's shares had gained more than 15% in the last week alone, giving the stock a 5-day increase of $3.40. Since Lucid merged with CCIV on July 26, 2021, the stock price has been extraordinarily erratic, rising as high as $29.03 per share and falling as low as $16.12 per share in the period following the merger. Despite what some may consider to be contrarian viewpoint, some believe that all of the current news is insignificant when compared to the importance of Lucid's manufacturing schedule. It has acquired more notoriety for its technology and performance, while also losing some credibility as a result of the company's failure to provide clarification on the Lucid Air deliveries. While Lucid has not formally missed its objective of mass manufacturing and delivery of the Lucid Air Dream version before the end of 2021, the chance of the launch taking place in the third quarter of this year is essentially non-existent. Furthermore, Lucid's objective of producing and delivering 20,000 Lucid Airs by 2022 would be further delayed as a result of the late start. The longer it takes for Lucid to achieve mass manufacturing, the more likely it is that the company will have to revise its prediction for next year. focus on what matters most. It's impossible to overstate the significance of achieving mass production. Having said that, Lucid's electric vehicle is indeed amazing to behold. Given the amount of attention Lucid is receiving, investors should keep an eye out for reservation updates to get a sense of how much demand there is in the car. If Lucid's car sells itself, it will save the company money on advertising and allow it to concentrate on its core competencies. Although it may seem obvious, uncertainty is a major factor in the current hype around Lucid Group. Despite its accomplishments and excellent press coverage from publications such as Motor Trend, the company is still in the growth phase. A goal date of somewhere in 2021 has been set for full-scale production and distribution, but time is running out. Although Lucid will begin deliveries in the coming months, the company must first demonstrate that the automobile is worth the price. The specs may be the stand-up feature of the vehicle, but if the car has problematic components, defective software, or any number of other minor issues, Lucid's service will be put to the test. But even as they expand, shops and service facilities in large cities are still few and far between. To summarize, Lucid has only met one of the many criteria required to be a successful automobile manufacturer. It has a killer vehicle, which is advantageous. However, does it have the necessary expertise and personnel to properly roll out and grow the Lucid Air system? For the time being, all we can do is wait. The conclusion: Lucid expects to begin vehicle delivery soon, but it will take some years before the company begins to generate positive net income. Researchers who had a $28 to $30 price target on the stock believe it will continue to record expenses in 2024, according to their estimates. Short squeeze may have played a role in the recent rise of LCID stock, which has seen an 8% increase in shares held short in recent weeks. Private investment and public equity investors may be able to cash out their investments in the near future, increasing the short interest rate. Due to the attractiveness of the stock charts, there may also be some speculation. In any case, there are now analysts who believe Lucid stock will keep rising in the near future. It is the quantity and speed with which Lucid will produce cars that should be of concern to investors. Its Arizona plant has the capacity to produce 34,000 units per year. It's expanding its operations in both Europe and Saudi Arabia by adding new plants. However, as chip shortages continue to affect the industry, production is expected to be reduced to just 20,000 vehicles by 2022. What are your thoughts? Do you believe that the market has swung in favor of LCID stock as a result of positive investor coverage and press coverage? And when they deliver, will the price be more than it is at the moment? Let us know in the comments section. Keith Gilbert states that once there are thousands of Lucid cars on the road, we'll be able to ascertain how long the battery will last. He feels that a smaller battery pack will be more beneficial for the average motorist who does not make long excursions, and that a range of 280 miles should be more than sufficient for this type of customer. That should wrap things up for today. Keep in mind that subscribing is still free and liking helps YouTube recognize your preferences. Thanks for taking the time to watch, and I look forward to seeing you in the next one.